From Daily Forex, this is Chris taking a look at the Australian dollar. The Australian dollar has fallen a bit during the trading session on Tuesday as we are now threatening the 200-day EMA. The 200-day EMA is an indicator that a lot of people will be watching or perhaps even paying attention to for potential support. All things being equal, this is a market that I think continues to be very noisy. Although it should be noted that the US dollar strengthening has been a feature across the board, and the Australian dollar has been an underperformer for quite some time. Ultimately, I do believe that the Australian dollar will continue to see plenty of selling pressure. Short term rallies will continue to be sold into at the first signs of exhaustion. The 0.6550 level is an area that I'm watching very closely due to the fact that the 50-day EMA is there, and it's more or less been a sign of fair value over the last couple months. As we break lower, the 0.64 level could be targeted. That's a large round psychologically significant figure that has offered plenty of support. And anything below there opens up the possibility of the Australian dollar will collapse at that point and really start to drop towards the 0.62 level. Short-term rallies, I think, open up the possibility for fading signs of exhaustion. But if we were to break above the 0.6650 level, then maybe we make a run towards 0.67. But keep in mind that the Australian dollar is highly sensitive to global trade and, of course, the U.S.-China relations. And with that being the case, I think you need to watch that sideline story as well. And I think at this point, the market is a little bit more bearish than bullish, but it really doesn't know what to do. If you're a range bound trader, though, this might be your market.